Time now for Hot Picks. Our next guest covers the health, wellness, and beauty segment, and e.l.f. Beauty is among her top picks. Susan Anderson is a managing director at Canaccord Genuity. She joins us right now. Susan, just before we get into your top picks, talk to us about how this sector and how these stocks might react to macroeconomic conditions. Everybody's talking about the strong U.S. labor market, for instance, this morning. We often talk about economic growth either increasing or slowing down, inflation either rising or falling. How responsive are these businesses and these stocks to macro signals like those?
Yeah, so generally beauty does hold up, fairly good relative to other discretionary sectors. It's definitely a little bit more defensive, but then we also cover the more consumer health type names, which, are more staple, so they hold up even better. But I would say in general, beauty names typically do hold up, which is what we've seen so far. We did see a little bit of a rough start to the year, I think, as consumers were just fatigued with spending after the holidays. They kind of stocked up, and then there was uncertainty around the tariff situation earlier in the year. But as that eased and consumers became more comfortable with things, they came out in the spring and summer, and we've really seen spending kind of normalize in the beauty sector. It has slowed. We saw, huge growth in beauty after COVID, and so it's really just normalized down to more like a low single-digit growth, which historically is what we had seen. In this more staple-like area, those ebb and flows, but typically also, end up being more low single digits over the long term. So they started off well earlier in the year, but then we saw a little bit tougher more recently as we've heard of some inventory destocking by retailers. Okay,
let's go to e.l.f. Beauty. It's one of your picks that you like. Why so?
Yeah, so e.l.f., we've really seen a huge rebound over the past couple of months as the data has really come back positive. We saw, like I said, a really rough start to the year, particularly in mass beauty. We saw some negative growth there, but that's really come back. I think a lot of that's been driven by some new launches they have out in the lip category with the $9 Glow Reviver, which is a dupe of the Summer Fridays. They also have some new eye products out that is really helping to drive that growth. And then as we entered the sun season, we saw their Untouchables line really doing well. Also, they've talked about some price increases because of tariffs coming in August. So that will help with the top line. And then we're finally coming up against easier compares in August as well. So we do think that momentum can continue as we go throughout the summer and then into the fall.
Okay, number 2 is Kenvue, ticker symbol KVUE in New York. This was once the consumer products division of J&J, I believe. Is that correct?
Correct, yeah, and it spun off, and now it operates solely as just a consumer health business, mainly comprised of personal care products and OTC, such as like Tylenol or Neutrogena is their big beauty and skin brand that they have. The stock's been down recently. As I talked about, there's been fears over, inventory destocking at retailers, which has kind of put these stocks under pressure. However, I think a lot of that's priced in at this point, and just given the staple-like nature of their products, we would expect the back half to return to growth. Additionally, we're starting to see the changes they're making with Neutrogena bear fruit. We've seen Neutrogena Skin now turn positive for the past several weeks. So I think that signals a trend of improved performance. And then finally, there's been some speculation around potentially selling off some of those assets, and they could potentially unlock that value starting in August. They also trade below their peers at 17 times, whereas other personal care peers trade in the 20 times right now, despite their margins and growth being similar or even better in some cases to those peers. So we think this is a good buying opportunity.
And let's go to the final hot pick, Paraggo company, ticker symbol PRGO in New York.
Yeah, so Paraggo is really a turnaround story. The company remade itself from a generic RX company to a new self-care company that sells OTC and personal care products as well. They have a number of cost-cutting and efficiency initiatives in place that's expanding its EBIT margin closer to peers in the high teens to 20% range versus the 13.9% they just reported last year. The company also had some issues with its infant formula business, but that's getting back on track, and we've seen double-digit growth there over the last last 2 quarters. It's really a value play in the space. It trades at 8 times next year's earnings versus its peers like Kenva in the high teens, and then larger cap personal care companies in the 20 times range. So we think there's significant upside as they're able to show consistent, steady results as a self-care company. Also, they just recently had an analyst day where they laid out 150 to 250 bips in op margin expansion by fiscal 27 and steady top line CAGRs. So we think that as they continue to show this investment is bearing fruit, we'll continue to see the stock re-rate and the multiple go up.